Welcome to the deep dive. Today we're really going to dig into some pretty interesting insights coming straight out of Berkshire Hathaway's annual meeting.
Yeah, the latest one. We're using a great piece from the Motley Fool as our guide here.
Exactly. It's titled Warren Buffett Talks Tariffs, Market Volatility, and Stepping Down as CEO.
Oh.
You get the idea. It just came out yesterday, May 3rd.
So fresh off the press.
Right. And our goal today is to unpack what Buffett actually said about these big topics. Tariffs, the market being, well, jumpy, and this major news about him stepping down as CEO.
Or preparing to step down. And it matters because, well, it's Warren Buffett. His perspective carries a lot of weight.
Definitely. People listen. This meeting gives us a real window into his thinking on the economy right now and the future of Berkshire itself.
A company lots of people watch very, very closely.
Okay, so let's dive in. First up, tariffs. He wasn't holding back much, was he?
No, not at all. He was quite direct. I think the quote was, "Trade should not be a weapon." Pretty blunt.
That's clear enough. What's behind that thought for him?
Well, he really emphasized the history. How the U.S. has benefited historically from trading with other countries.
Selling its best products to a wider market, that kind of thing.
Exactly, letting American companies reach global customers. So his concern seems to be that tariffs could mess with those long-standing benefits.
Right, disrupting those connections.
Yeah.
But even though he doesn't like tariffs, he still sounded pretty bullish on the U.S. economy overall.
That's the interesting part. Yeah, despite clearly not liking tariffs as a tool, his basic belief in the U.S. economy's strength seems unshaken.
So the core advantages are still there, in his view.
Totally. He still thinks it's a great place to be born in the U.S.
I remember reading that quote about American exceptionalism. That really stood out. Someone asked if that impacts how he invests.
Yeah, that was a key moment. He talked about America's history of, constant change. Big, sometimes revolutionary change.
And navigating huge challenges. Recessions, even the threat of nuclear war, he mentioned.
Right. And through all that, his point was, it's still been the land of opportunity. He didn't see those challenges diminishing that fundamental fact.
And he had that funny line.
Oh, yeah, the one about negotiating in the womb.
Yeah. I would keep negotiating in the womb till they said you could be in the United States.
It just shows how deep his conviction runs, So, bottom line on tariffs, he thinks they're bad for trade, but it doesn't fundamentally change his long-term view on investing in America.
Okay, got it. Opposes them, but his core U.S. investment philosophy holds firm.
Pretty much. Now, what about market volatility? That was another big theme.
Right, especially with Berkshire apparently sitting on a mountain of cash.
A record amount, actually, as of the end of the first quarter this year.
And then there was that whole Liberation Day thing President Trump announced back on April 2nd. The market got a bit choppy after that. Did that make Buffett rethink holding all that cash?
It seems not. The article says when he was asked about the market swings, in the month or two after that, he basically waved it off, said something like, recent movements 30, 45, 100 days are really nothing in the grand scheme of things.
Wow. That's a long view. Puts the daily headlines in perspective.
Isn't it? He has such a different time frame. He even brought up these 3 times in Berkshire's history where this stock dropped by over half. 50%.
Well,
huge drops. But the key point he made was that the actual businesses, the fundamental companies Berkshire owned, were still doing fine.
So compared to that, the recent ups and downs are just noise.
That seems to be his perspective. It makes you think what we consider a volatile market might look pretty tame to him.
Yeah, it's so easy to get spooked by the short term.
Absolutely. And he had this interesting observation about investor psychology.
Oh.
He noted how people accept gains with remarkable grace, was his phrase. But when the market drops by a similar amount...
Panic stations.
Panic and speculation, yeah. It's like we demand a reason for the market to fall, but we just accept it when it goes up.
That rings true, doesn't it? Always looking for the culprit when things go down.
Totally. And his advice was classic Buffett, really. People have emotions, but you gotta check them at the door when you invest.
Simple but powerful. Keep the emotions out of it.
It's his mantra, basically. So the takeaway on volatility, it's normal. Don't panic. Focus on the long haul and the actual business fundamentals.
Makes sense. Okay, so that brings us to the third big point. The succession plan. Greg Abel.
Right. This wasn't a total surprise. The name Abel has been out there as the successor for a while now.
But now it sounds more concrete, like happening soon.
Yeah, Buffett said he plans to ask the board to officially appoint Abel as CEO by the end of this year, so the timeline is becoming clearer.
That's significant. What are the implications? The article mentioned something about capital allocation.
Exactly. That's the big question mark, isn't it? How will Abel, as CEO, handle Berkshire's massive cash pile and decide where to invest it?
Does Buffett think he'll do things differently?
Well, Buffett expressed confidence. He thinks Abel shares similar principles. But, putting those principles into practice day to day, that's where we might see subtle shifts. It's still something the article flagged as sort of wait and see.
It's got to be immense pressure stepping into those shoes.
Oh, kidding. A 60-year legacy.
Yeah.
But Buffett made it clear he's not just vanishing.
Oh, right. He's still going to be around.
Yeah, he said he'll still be coming into the office every day. And he'll be available for the really big investment decisions.
So, more like a transition than a hard stop.
Seems that way. The day-to-day leadership shifts, but his presence and presumably his input on major calls will continue for a while.
Still, it's the end of an incredible era. 60 years as CEO.
Truly remarkable. But, as the full article pointed out, his wisdom isn't just disappearing overnight.
Good point. We still have all those shareholder letters.
The letters, recordings of past meetings, his writings. There's a wealth of material to learn from.
Absolutely. Okay, so let's quickly summarize what we've dug into.
Sounds good. So first, Buffett on tariffs. Bad for trade, basically, but not enough to dent his fundamental optimism about the U.S. economy.
Right. Then, market volatility. He sees the recent stuff as pretty minor, historically speaking. The key is stay rational, think long-term.
Don't let emotions drive your decisions. And finally, the CEO transition. Greg Abel is set to take the reins by year-end, but Buffett will remain involved, especially in major investment choices.
And for you listening, understanding these perspectives from, let's face it, an investment legends can really help frame your own thinking.
Yeah, it gives you context for your own decisions and for just understanding the economic noise out there.
That emphasis on the long game, on emotional discipline.
Yeah.
It's timeless advice, really.
Definitely. Plus, watching how this leadership change at a giant like Berkshire plays out, that could have ripple effects worth paying attention to.
It really could. Which leads us to maybe a final thought to leave you with.
Yeah, something to chew on. As Buffett steps back from that CEO title, even while staying involved, how will Berkshire change?
And maybe even the wider investment world.
Right. What new perspectives might Greg Abel bring? What priorities might shift? And crucially, what parts of that core Buffett philosophy are likely to stick around no matter who's officially CEO?
Lots to think about there. It's definitely a transition worth watching unfold in the coming years.